And here is the Blockchain Technology Outlook and Global Business. Please welcome the panel up front. No, really, please, please, put your hands together, please.
Where do you want me, first or last?
It doesn't matter. Sit. Yeah.
Thank you. What do you do with the pillow?
Good question.
Right.
Give a little bit of a...
It keeps you forward like this. And then where's the TVs over here?
Oh, here's Mohammed. Right at the front.
Hey, good afternoon, everyone.
Good afternoon.
Yes, let's get started. Okay, it's too loud. Okay, so welcome all of you to Blockchain Technology Outlook and Global Economy Outlook. I'm really interested in talking about blockchain technology. It's a multi-trillion-dollar opportunity that always excites me. And today we are going to see how the synergy between blockchain and other emerging technologies and fields are going to bring huge amount of value to humanity. Let me introduce myself. I am Arif Ansari. I need a clicker.
Is it a clapper?
That's okay, I can talk. I'm a faculty in Marshall School of Business and a colleague with Nick Vias in the DSO department. To talk about myself, I teach business analytics to MBA students and executives. In a nutshell, who am I? I'm a viralizer. I like to predict virality of content and engineer virality into content. My area of expertise, which is called creative analytics, solving semi-defined, undefined, or ill-defined problems. Recently, my work in the Super Bowl, we were able to predict all the viral ads of Super Bowl before they became viral. And we completely destroyed the existing technology, which is called A/B testing. A/B testing only allows you to find out which is best among the worst, or the best among the best. Today, people are employing these 4 T's. The technology is called what? Tease the content. Test it, tweak it, and then target. This is another multi-billion-dollar opportunity. Now, I'm a tangential thinker. I like to bring tangential information into my field and other fields. Let's go to our supply chain from the social media space. I predicted the viral rank is 67. I have an algorithm. And here's an interesting fact. 6,000 tweets reached 59 million people. What is the key takeaway? All these people who are tweeting are thought leaders. So here is a message to our thought leaders in this particular auditorium. Every one of you tweet. It reaches a lot of people about global supply chain. Blockchain is again a viral topic. Viral rank is 38. 430,000 tweets reached 1 million people. DAO. We are going to talk about the alphabet soup in a minute. Has a viral rank of 600. And 250,000 tweaks reached 2 million audience. Decentralized AI, one of our panel is an expert in that. He's going to talk about it. The viral rank is 187. 1,400 tweets reached 1.7 million audience. Let's look at the next one. Metaverse. Everybody's hot about metaverse. The viral rank is 8. You know what is viral rank 1? Gangnam video. So it is in the club of what? Gangnam Video. 500,000 tweets reached 6.7 million audience. And then you can see what? Web 3.0, viral rank is 37. NFT, viral rank is 13. You know what I'm talking about. I created the world's first emoticon analysis. Emoticon is a universal, non-verbal language. Across the different communities and ethnicities, all speak the same language. By looking at it in one click, you know if it's all green, that's good news. If it's all red, bad news. With that said, I want to introduce my panel and get their esteemed insights. So let's start with that. Okay, so what I'm going to do is, I'm going to introduce them one by one. First, I'm going to introduce Steve. Steve is running the company Crowdz, and he is a fintech SaaS expert. His company has given out $30 million to small businesses. I think I should send an application to you for my company, right? And I want him to talk about his company and the exciting things he's doing. Steve.
So I don't have any slides. I actually grew up down the street from here, right? Grew up as an underdog. Been told that I couldn't do certain things. My father owned a laundromat, small, medium-sized business. I knew how hard it was for him to make payroll, to make rent. I saw it early in my childhood. That's why Crowdz exists today. Crowdz is a SaaS platform. It is a marketplace where we bring sellers and buyers together. Small, medium businesses can actually sell their receivables, in this instance, invoices, to banks and hedge funds and get favorable rates. You know, it's interesting because in the free world, 60% of the GDP is driven by small, medium-sized businesses. Yet, those guys can't get favorable rates because they don't have the financial girth like a Walmart. Crowdz is here to change that. The reason we're called Crowdz is we take a $100,000 invoice, stack it on top of each other, just like they used to do with mortgages, and now it becomes a $35 million portfolio, which becomes compelling to the financial institutions of this world. We operate currently in 6 different countries. We've partnered with Meta and Facebook for the last 18 months. Citibank is one of our biggest customers. MasterCard is actually launching a program with us that involves NFTs. That's expanding in Brazil, Australia, and Italy. So again, you know, small, medium businesses have been ignored for far too long. This is a way in which we can digitize the data and to be able to do the analysis to get them favorable rates at a massive scale so that we can democratize getting cash in the hands of these small, medium businesses globally. So that's what we do.
Thank you, Steve. Steve is modest. He's trying to disrupt a $9 trillion industry. I hope I will be part of him so that I can also make some money. Next, I want to introduce Maneesh, founder and CEO of Real Simple Labs. And he is doing Web3 software for creators to maximize the earning potential. Maneesh is a Stanford graduate and a serial entrepreneur too. Maneesh, your turn. Talk about the exciting things you do.
Sure. I just want to say thank you so much for having me here on this panel. Very excited to chat about blockchain, AI, everything, and be here with all these such accomplished people. So just a little bit about myself and my company. I'm CEO and founder of Real Simple Labs. We're building a platform that allows fans to invest in their favorite creators. And the way we do this is using blockchain technology. The insight behind this and just the reason why we started this company was based on a singular premise, which is creators are up and coming, and they do a lot of good for our society. But yet, in the current system, for some reason, they're not really paid that well. And blockchain Web3 is actually an opportunity. It's a technology that allows the incentives to align finally, not only with them and the platform that they're distributing their content, but also with the fans that they're serving. This idea of being able to identify your 1,000 true fans. And so that's what we're building. And I'm very excited to share with you all about it.
Thank you, Maneesh. Next, we have Young
I think
with us. He is the first cohort and the first student of the first cohort of USC graduate program, which is MS Global Supply Chain. Give him a big hand. He is a serial entrepreneur, revolutionizing textile space and other related industries. Young, give your insights.
Hi, everybody. So, my name's Young. So, like you see on the screen, the Dope Global, I'm the co-founder and the projects. And I swear to you, it's nothing related to marijuana or anything cocaine, okay? It's not substance related, okay? So DOPE stands for the Designer-Oriented Platform and E-Commerce. So I come from a fashion background and a textile background and as a supplier and also e-com background. So I have series of businesses that I've been through from the experiences and through the GSCM program, which opened up my perspectives in all business industries. And with that, I just thought that I need to help all the underpaid designers. You know, like they don't get a recognition. They don't have any way to build their reputations in their early ages. The average designers around the world, the average age of the designers around the world are 38, okay, which is very late, and a lot of them are underpaid. And only 23% in the US who has a title of a designer so are actually hired, and everyone else is a freelancing. So with the NFTs hype and all this fast growth in this industry, the goal is to disrupt and also lower the bars for the entry of making the career and also income for those designers and supplying those marketing hypes for any event sponsors through dope projects. Thank you.
Yes.
Do I actually hit the button?
Yeah. Do you have the presentation?
Yeah.
Okay.
I don't know. It's not moving.
It's not moving. Is the presentation of him loaded up?
Nope.
It's moving. It's
Nope.
just
No, this is my
Is it going-
presentation.
It's actually going back.
No, his presentation has not been.
So I hit next, right?
Yeah, next button. I think they're going to load
But
it
it
up.
was going back.
No, this is my presentation.
Oh.
Yeah, there's another next presentation. That's okay, we'll come back to it in a minute. Okay,
Oh,
next I want to introduce Bill Inman. He's the CEO of Singularity Studios, and he builds AI solution, proprietary for enterprises, and he's a graduate of USC Davis and University of Arizona, and he's a patent holder too. Let's listen from him, all his exciting things he's doing.
Yeah, thank you. Thank you, Dr. Ansari. You don't get the introduction, but your background is very impressive, and thank you for moderating today. And thank you to Nick Valles for hosting this and allowing the opportunity to be up here today. So I'm excited to share with you some blockchain knowledge. As Dr. Ansari said, I'm the CEO at Singularity Studio. We're a commercial spinoff of Singularity Net, which some of you might know. It's the world's foremost decentralized AI project, started by Dr. Ben Goertzel in 2017. It's powered by the AGIX token. It's a nonprofit. It brings disparate AIs together in the pursuit of benevolent, decentralized artificial general intelligence, or human-level AI that nobody owns, that does good for humanity, which is contrary to the centralized AI that the big tech firms and so forth and governments are certainly trying to gain. So at Singularity Studio, we take some of the innovations at Singularity Net and we spin those off into commercialized projects. And not only am I the CEO there, I advise many of the projects. We've spun off DAOs. We've spun off networked, crypto-enabled networks. Sophia the robot, some of you might be familiar with, is a project that we're a part of. Her alter ego, Grace the healthcare robot assistant, is also a project that we're empowering. So very thrilled to be here. Have a lot of experience advising metaverse companies, decentralized crypto-based organizations, and I think there's a lot to share. Also, We also have spun off and work with multiple supply chain companies. I have a deep background in services supply chain on the human capital side, and I've met a ton of smart people here today. So I think that this information will be useful. I hope it is.
Thank you, Bill.
Yes. Should I
And
pass
now
the baton
getting
back?
back, it's okay, you can give to me.
Okay, sure.
Yeah, thank you. Now getting back, so here's an interesting fact. Big data spawned a lot of animals, whether you know it or not. Pig, hive, impala, python, etc. In the same way, the blockchain has created what is called the alphabet soup of so many names, DAO, D5, etc. I want each of a panel to explain it. Before that, I want to give you an outline from my perspective how to simplify things. I always tell myself and my students, think like a VC. They take the helicopter view. So what is blockchain? If you break it down, decentralized. Of course, we were doing decentralized computing a long time ago. The second thing is what? One version of truth. Yeah, we were doing in terms of data warehouse. Trust, of course, trust comes if it is reliable. And the fourth one is the ledger, which I missed out because it's accounting and boring, just kidding. When you think about it, when you put all these things, it created and spawned a new multi-trillion-dollar industry. And it's growing. It's not just blockchain. The blockchain is creating many children, each with a huge potential. And first, for the benefit of everybody in this audience, I would like each of my panel members to talk about one of the alphabet soups, one or two of their interest. Let me start with Bill.
Okay. I'm gonna talk about DAOs or DAOs, decentralized autonomous organizations, but I'll start with decentralization. As many of you probably realize, the Bitcoin white paper was really based on decentralization, which is the movement from centralized power structures, whether they be individuals or companies or governments, to a more decentralized structure. And of course, Bitcoin the white paper was formulated right around the last financial crisis in 2007, and was really meant to provide a platform or a philosophy on decentralizing the banking and finance system. And you've probably heard a lot about that along the way. And of course, Bitcoin has certainly gained in popularity from being pennies to being $20,000 or so today, and reaching a high of $66,000-ish last year. So decentralization is really fundamental to blockchain. It's a key component. However, blockchains do not need to be decentralized. Cryptocurrencies are decentralized, and it's a use case for blockchain for decentralized finance. But there's so many use cases for centralized blockchains too. So decentralization is that disbursement of power into a network, and that network doesn't rely on one person or one company for trust. That trust is then, in the case of blockchain, recorded in an immutable record. It's transparent. It can be seen by everybody for all time. So decentralization is a fundamental part of DAOs, decentralized autonomous organizations. These are organizations that are run really by smart contracts when you implement blockchain into them. Smart contracts are predetermined. Certain milestone or events are hit, and things happen that are automated, decentralized autonomous organizations. You can have an AI DAO as well, where an AI runs the DAO for you based upon its decision-making process. So it's a little bit smarter than a smart contract, which smart contracts is kind of a misnomer. They're not super duper smart. But AIs like Sophia the robot has Sophia DAO. I mentioned I work with the Sophia team. And she will be the CEO of her own DAO and make decisions, and the token holders will take part in helping to formulate what she makes decisions on. So decentralization and DAOs are a really important part of blockchain. It's really the fundamental philosophy behind much of what blockchain is.
Thank you, Bill. Now let's go to Young.
Yes.
What is your alphabet soup in your industry which you want to talk about?
So it will be the NFT, the non-fungible tokens. So the NFTs, the rise for the last 2 years has been phenomenal. So you actually have 1,800% of growth in transactions and sales of NFTs over the last 2 years during the pandemic. And what does that translate? That means that it's actually going against what the traditional model has been in the art industries and collectible industries. And the rise of MZ generations, they want to get hold of these art pieces. They want to be the one who wants to build the wealth. I don't know if you're familiar with Joseph Schumpeter, political economist, talks of the Schumpeter scale, which is known as a creative destruction. So going against the traditional wealth, destroying it, and there's a new wealth and the value comes in the economy. So how does this innovation and the creativity brings new economy to the market? And I think the NFT is actually proving his model in terms of this. Okay, I know if anybody's familiar with his work that I might sound like a communist or based on Marxism, but I think that this creators' economies is actually lowering the bar to enter as a participation of these economic activities with the NFTs based on the blockchain, and this technology is enabling the newcomers and with a new wealth in the system. I mean, earlier we saw the tanking chart of the stock prices these days, but now people say this is crypto winter. But if you see the whole picture from the beginning of the rise of the Bitcoins and crypto, it's actually gradually rising. It's almost similar to the Procter & Gamble chart. So if you think about it, think about like how the non-fungible token is acting. It's giving the authentication and transparency, and it's reachable. And that kind of utilization of multi-ledger blockchain technology, and it's actually creating a new hype that's worth taking a look into.
Thank you, Yang. Now let's go to Maneesh. Maneesh likes to untangle webs. He's going to talk about Web 1.0, 3.0, etc. Manish, your turn.
Sure, yeah. So, yeah, I'll talk about Web 3. I think, so obviously there's just so many buzzwords, right? We're literally, like what Professor was saying, alphabet soup. I can give it to you, essentially. Web 3 essentially is the umbrella term for essentially a lot of the buzzwords that we're talking about, DAOs, NFTs, DeFi, etc. And it really is synonymous with blockchain itself in a way. But I think humans, we like to just like put kind of nice terms and be able to like make sense of things using buzzwords and jargon. And so Web 3 is the attempt. It's almost like a marketing attempt. But essentially it represents a fundamental progression in the internet and how we as people interact with other people and how information flows online. And so I can put it into context Web 3 versus like what Professor was saying, Web 1 and Web 2. Web 1 is essentially one of those old web pages you go to online where it's just simply just a bunch of text that you just read. And so Web 1 is primarily about reading information online. Web 2 is about writing information. Think Facebook, where you can post something and other people can see it. It's both reading and writing. And so Web 3 is a third thing, which is ownership. It's not only reading and writing information, but that information can now be owned. And you can prove that one person or some entity owns it using the blockchain, using decentralization. And this has massive consequences for us because it builds on top of everything that has come before, right? Humans bring in their own kind of, I don't know, all these buzzwords are there, but like we still have our own motives that kind of get put into this whole thing. You probably have heard of some of these NFTs being sold for millions of dollars. And you're like, how could that be possible? It's literally just an image. And I could just right click and save it. The thing is that humans they like status, right? And owning one of those images is a status thing of wealth and power. And now, for the first time ever, we can online with something that's digital. We can show it off to other people. We can put it in our Twitter profile and have it be seen by millions of people. In the same way that you would wear a Gucci watch and you would walk in this conference and say, I look good. Now, instead of just 100 people seeing it, or like 1,000 people seeing it, right, you have millions of people seeing it, right? And so that's what Web 3 really is. It's a progression of everything that we have experienced in the digital world.
Thank you, Manish. Now let's go to Steve and look for his wisdom.
I don't know about wisdom. I mean, I've learned more from my mistakes than anything else. So our company has been on Ethereum blockchain since 2017. And my mom immigrant, pretty old right now, but she's still pretty hip still, right? She's still on Robinhood, trading crypto and stuff like that. But she asked me a question in 2017. She said, what is an NFT? And again, my mom is pretty old, but hip. So I explained to her, very simple terms, if you sell a car, the title goes with that car. If you sell a house, the deed or some certificate that says, hey, the ownership of this house goes to whoever buys that house. An NFT is nothing more than something, it's like a deed. It's like some type of evidence that you own a certain asset. It just happens to be digital. That's all an NFT is. Right? So we're talking about artists selling their digital artwork. Every time it's sold on the secondary market, they get a certain cut of it, royalties, commission, whatever you want to call it. Right? So that's the power of an NFT. It's nothing more than evidence saying who owns this asset, and then when it gets resold, then who owns it, and it's being able to get tracked from that perspective on a decentralized network. That's all NFTs are. So that's, I mean, just to boil it down to very simplistic terms.
Thank you. Now let's go on. So we get clarification on all the best terms. Now the next thing is always the cloud, the hanging thread, the hanging knife. The biggest hanging knife, which is affecting the blockchain industry, is the crypto winter. And here's some facts. Can you guess what is the crypto valuation, total market valuation as of today, still, after the crypto winter? Anybody here? $500 billion, even after the crash. I think this is the second or third winter they're talking about. And here's another interesting fact. How many real currencies are there in this world from different countries? Around 180? Can you guess how many cryptocurrencies are there? Multiply by another factor of 100. Around 18,000 or 19,000 currencies are there. Having said that, this is a big issue in the minds of a lot of people. So I'm going to ask my esteemed panel, one by one, right? What do you think is going to happen? We all know there are lots and lots of smart minds working in this area. I want to get your take on it. What is going to be the future? Starting with Steve.
So I don't know if anyone's heard of the hype curve. Whenever there's a new phenomenon, a new technology, a new solution, it typically goes through this hype curve. You know, once it's introduced to the market, there's a lot of hype and a lot of publicity, and you saw that happen with crypto a few years ago. And then followed by the hype curve is this disillusionment, right? It basically crashes. And I believe that we're kind of in this trough, this crypto winter, as people call it. And typically what happens in this trough is things have to get validated. There needs to be a product market fit, right? So my personal opinion is there's all of these cryptocurrencies out there. I think a lot of them are going to fall out. And the ones that are going to remain are the ones that actually have some type of utility attached to it, right? So the Dogecoins of the world, when people tweet about it, Elon Musk tweets about it, goes down 25% in 3 hours, right? Things like that I don't believe are going to survive. It's not stable enough when one person can tweet and all of a sudden everything crashes, right? There needs to be some utility tied to it. JP Morgan and Chase on CNBC said, quote, NFTs are set to dominate the digital asset market. And so if the NFTs have some type of utility attached to it, and it can improve efficiencies, securities, make things simpler for the user, those are the things I think are going to be left behind. And once you get out of this disillusionment and this trough, that's where you have the adoption, and things start taking off again. So long story short, this crypto winter, I think it's a cleansing exercise, right? The ones that are just hype are going to fall out. The ones that have utility are probably going to remain, and then it's going to take off. And you know, this is where you see in the financial industry, for example, you know, banks have tried to avoid this for the longest time, but now they can't, right? And this is why my company is engaged with the banks to help them get there. And in that quest, to be able to help small, medium businesses, because an NFT is vital to be able to track all these transactions that necessarily can't be tracked right now because it's done manually through the banks. So that's my personal opinion.
Thank you. Maneesh, your take on it?
Yeah, I couldn't agree more with what was just said about how there's highs and lows, but ultimately the projects that are going to stick around are the ones that have real value, real utility. I think just a little flair to just put on top of that, which is sometimes the utility is not evident to just like someone who's from the outside looking in. Some of these things that seem like, why are they so expensive? They're simply just status, right? Or they have sentimental value for a specific community of folks, and that in and of itself is a value. I was talking before about how this technology is changing, right? But human behavior really doesn't. And this idea of like belonging and wanting to be with other people very much exists on the blockchain. That's the idea of saying, I owned this coin, I owned this NFT early, and we rode this wave up and down together, and that bonds people. And I think COVID really made it so clear to us how important that connection is, and right, people are finding that online. So that's the only thing I would add. But ultimately, I think at this point, too many smart people are in this space. It's getting adopted worldwide, this technology. It's here to stay for sure.
Young?
Yeah, so like Stephen, everybody talks about the utility, I think is fundamentally the most important thing in this world, in this aspect. And I think that like we have to think about more in a social science point of view as well, and a psychology as well. And how does this bring somebody's status up, you know? The lowering the bar in terms of like gaining wealth in our traditional economy is now so ripe, and there are so many people who just knows how to be rich, you know. And with this new technology and this new market, and now the young generations are like eager to learn about this. I just want to give you a quick question. Like, can you raise a hand if you actually own a crypto wallet? Yeah. So still not even half, right? So when I first heard about the Bitcoin, that was like probably like 8-9 years ago. It was my salesperson's son. He was 10 at the time. And he actually told me, that, yo, are you getting into the Bitcoin? I was like, what's a Bitcoin, you know? And he asked me to buy, you know, it's like just chip in a few dollars. I wish I did that then, you know? But anyway, so long story short, those kind of early adoptions creates fear. Like if you don't know about it, there's a fear. But why do we have to be in here? It's a utility, right? There's more business models. We have so many engineers and coders, and that's smart enough in this world to change the models and the daily lives, the lifestyles. But if you look at the SSG, like who's really taking over the Korean retail space and a department store company in Korea, but now like they're buying retail grocery stores here in the US, and they're going to be making the SSG market, and hopefully they want to advance to department store. But how they utilize NFT is that they actually issue authentic NFTs as a certificate if any of their customers buy like luxury goods as an authentication. So this kind of like real life utility is getting popular. So once the utility is proven to be there, the markets, this crypto winter will feel like nothing to it. You know, it's just a small dip. I mean, we feel it like a 2-year term, but After 5, 10 years, this is a very short term of a fallout. If you think about the potential of the utility and where this technology is leading us to in terms of the lifestyles and everyday economic activities that you will be participating. So like think about that perspectives, and that's going to boost the economies separate from our traditional currency market, then the new market into the metaverse, decentral lands, it's like these kind of like new asset wealth that's creating right now. And you're at the head of the curve right now and seeing all these brilliant minds trying to prove their business models here.
So my mom has a wallet,
Uh-huh.
right? And my 4-year-old son has a wallet as well.
Oh, really?
Yeah.
That's impressive.
I tell him don't buy Dogecoin anymore. I know it's a cute little dog, but don't do it.
Bill, your take on it?
Yeah, first of all, a lot of good answers up here, and a lot of good wisdom. The thing about winters is that they happen every single year. Now, being a crypto winter it's been a little bit different. The first winter that we had, or I should say the last winter we had, which followed the 2017 rise, when there were a lot of ICOs, initial coin offerings, there wasn't really a lot of exchanges to trade your cryptocurrency. So what we've had since the last crypto winter, where you saw Ethereum back in 2017 was hundreds of dollars back then. In the rush, in the bull market, the Ethereum went all the way up into $4,000, $5,000. So, and now today it's at 1,900. So what we're seeing is a cycle. So I get to interview a lot of really smart people in industry through my vlog, and one of those is Michael Turpin, who was an early Ethereum investor, and he's literally advised hundreds of cryptocurrencies and sits on their board. And this one stuck with me. So he told me this in early 2021 when I interviewed him. He said, get excited about the bull run, but get ready for a downturn, because you're going to have these crypto winters, these cycles and waves for the next couple decades. Because it's a volatile market, humans aren't really adapted for this type of technology yet, and the key word up here is utility. So in a bear market, let me just backtrack. CoinMarketCap.com, you could see how many cryptocurrencies are registered on that website. It's a good resource. The number went up to about 20,000 cryptocurrencies when Q4 of last year was about 9,000. So about 11,000 cryptocurrencies just in the past 8-9 months were developed and launched. Many of them are meme coins. They don't provide a lot of intrinsic value. Not to say that you can't really inflate a meme coin and then they can hire developers and have value, because that's possible too. Once you have capital, you can pretty much do anything. But what Michael Turpin was saying is that, look, you're going to have cycles and waves, but generally it's going to go up. And builders are going to take advantage of this. Hopefully they've raised money or they have capital or they're super smart in their garage, and they're going to build utility, and they're going to build amazing things. I know the projects that I'm working with, whether it be real estate or fashion or what have you, they're building utility. They're building real-world utility. A project I work with named DReal, for example, will be leveraging their DRe token to incentivize real estate agents to put 3D versions of their listings on the internet. And they'll be incentivizing them with that. So real things, whereas with Dogecoin, you just had develop a meme and buy and cross your fingers. Twitter doesn't bite you that day. So the profit takers are gone. The builders are building. The winter will give way to spring and then summer, and it's going to get hot. It's just a matter of when.
Thank you. Thank you for the panel for removing the fog out of cryptocurrency.
Yeah.
Thank you, guys. Now, we are going to look at the outlook. People always tell technology is growing. It was not only growing, it's growing rapidly. It's accelerating. What is the reason? I always tell the reason is confluence of technologies and different industries, which is accelerating this growth. So having said that, let's see how the trillion-dollar industries are merging. Let's look at creator economy. We are living in a creator economy. Everybody's betting it's going to be a multi-trillion-dollar industry, and blockchain universe, another trillion-dollar universe. These two are colliding. So I want to ask this pointed question first to Young and then to Maneesh. How you see this? How you're going to leverage it? How we are going to monetize it? So I can be part of it.
Right. So again, like it's the urge of the desires. Really, it's like everybody's thirsty of getting rich, or at least like try to find a foundation of their wealth, try to find a model, and I think that the resale rights in the NFT world is actually symbolize like how the artists or creators actually receive their income. So like a lot of musicians out there, they're now utilizing NFTs for their passive incomes as well as the IP rights. And you also have to, we also have to focus how many countries around the globe actually establish the IP regulations, you know, and also regards to the rights for the creators. Okay, only the established economies have those kind of things. You know, the resale right is not something new. Okay, everybody talks about it, but it has been there since like the art has been there. There's a sponsorship, there's a gallery, there's a curator, and there's a buyer. And what NFT does is, and also like this is like a main focus of our platform as well, is to connect the buyer to the artist or the creator directly. So you're taking out the medium of like all those things. So that adds the credibility to the business model and also for the technology's intention, really, which is like based on the multi-ledger. So you have this transparency. I mean, we hear the transparency throughout the summit from yesterday. And I think the transparency can also scare people, scare the businesses. It can also show the different aspects of the characters in terms of the economic parties who's participating in these activities. So how does the creator actually put his or her work out there and build the reputations? And I think the marketing side of it, like how do you create the demand? And that's the question. And most of the retailers, brands, they go after the marketing hypes. So they want to create marketing hypes. And what does NFT bring as to that fume is to creating those direct connections between the creator and the consumers. So there's new collaborations are available now. So through these new collaborations, everybody's like hyped about, you know, like Adidas, like collaborating with Balenciaga, you know, like, and you know, like Supreme with Louis Vuitton, you know, like, so everybody's like, you know, have desires for that. And only even those like collaborations, there are successful ones and the failures. The successful ones are the ones that connected more to the masses, okay? Not just to these discrete high society people. That's not the case. It's about the popularity and the access. The more access that's freely given to the participants in this model, and that's actually growing the model and the economy of like this blockchain and crypto world. So,
thank you. Now for Maneesh, I want to throw a curveball too. Add metaverse to it.
Add metaverse? Sounds great. Okay. I couldn't agree more with what Young was saying about how the creator economy and Web3 and NFTs, how it essentially connects the creator with their fans in a way that has never been possible before. So I'll give you, actually, let's do this as an example. I want everyone in the room to think of your favorite musician that you feel like you identified early. I feel like everyone, I've asked most people this, and most people have someone. So imagine them, right? And then imagine 10, 15, 20 years later, right? They're headlining Coachella, or you're at a dinner party and you're saying, somebody else is talking about them, you're saying, oh, I listened to them, I've been listening to them for years. So one, there's no way you could prove that you were actually listening to them in the status quo. And two, there was no way for you to actually put your money where your mouth was and say, hey, actually, I want to support that artist, and if they get more popular, maybe I can make some money as well. So it's about the alignment of the incentives that Web3 offers, where it's not a zero-sum type, I pay you $10 and you give me content. That's a Web 2 way of doing things. In Web 3, it's I support you with some kind of, I'm more of a patron. I give you some investment up front and we can win together. So here's another buzzword. You might have heard this buzzword, WAGME. We all gonna make it. This is all over Twitter. That's what WAGME means. And so that's what it means to buy into an NFT collection. And when a creator puts that out and says, hey, I'm gonna value this. If you are here and my first 1,000 NFT holders, I'm a musician, I'm going to let you come backstage if you come to my concert, right? That's immediate real value that's linked to that digital good that then has value over time. Imagine that musician getting really big and then headlining Coachella. They're still doing that 1,000, you get to come backstage, right? And so that's how that thing can actually increase in value. Supply is limited, demand goes up. And so this is groundbreaking because it means that creators can finally make a living, a real living, and make a lot of money. And so can the fans. Whereas before, Facebook, Instagram, Snapchat, TikTok, right, the incentives aren't aligned, right? Everyone's always complaining, but it's not really, it's just what the market will allow, right? Which is that in that case, you're just paying, the creator is paying, essentially 80% of what they could be making, right, for the distribution. And that's not necessarily good or bad. All of this stuff that we're talking about with crypto actually gets magnified because players like Facebook, Instagram, and so for Twitter have connected the world, right? I think 3 billion, 4 billion people are online now, right, on these social media platforms. So that's why we see all these prices of NFTs and everything going up so quickly, because so many people are looking, right? It's just like, you can view it as basic supply and demand, but that's why it's just the most incredible time.
Thank you.
It.
And Steve wants to add his insights on it.
Yeah,
so let's listen to him.
So Young and Maneesh talked about, B2C, business to consumer, or C2C, consumer to consumer, right? My company, Crowdz, is focused on B2B, business to business. And this is a supply chain conference, right? Our company has 3 pillars. We have tech, we have supply chain, and we have finance. So taking a real-world example that cannot be done right now, we're the first one to ever do this B2B when it comes to tokenization. We reach out to our lawyers in Switzerland who are like at the forefront of crypto and tokens and NFTs, and we ask them a question and they still don't know because the regulations have not been formulated for this yet. Crazy, crazy, frustrating. I pay these guys a lot and they can't even give me an answer, right? It's, let's go talk to the regulator. So supply chain, right? Let's say a small, medium businesses want to sell a $100,000 invoice. They want to sell it to a financial institution for $98,000 and get paid tomorrow. And so they don't have to wait 90 days for payment, right? The person who bought it or the company that bought it can hold that for 10 days. There's still 80 days remaining on that. They can resell that on the secondary market. That person who bought it, they only want to hold it for 20 days. There's still 60 days remaining on that receivable. They can sell it on the secondary market. Now, each one of these transactions, they have to be tracked in some way. And this is where NFTs come into play, right? NFT, again, it's just it's evidence that, hey, I own a certain asset, right? And right now, that cannot be done. Everything is done on spreadsheets. It may be done on the cloud, but we all know that that could get hacked right away. I mean, even the CIA got hacked, right? So, that's an application directly relatable to supply chain finance that helps a small, medium business. So, again, all the technology here, it could be B2B, C2C, B2C, all over the place, right? It's different applications, different use cases, even AI, right? So I just want to point that out because, this is important when it comes to supply chain, right? And this is a supply chain conference, so there is application there.
Thank you. Now it's Bill's turn. AI universe is a $1 trillion industry. Yeah. And the decentralization principle is being applied there from the blockchain. Another $1 trillion ideas. How these things are combining together in your industry and what do you see as the opportunity?
Sure. The crypto industry is really the emergence of blockchain and finance and using that one technology to disrupt the global finance system. But when you start to add in other Web3 assets, robotics, metaverse, AR, VR, cryptocurrency, blockchain, you get a lot of really interesting mashups that people haven't explored before, and certainly people haven't protected from an IP or patent standpoint, so there's huge opportunities there. As you mentioned, my first patent was a blockchain patent, and we filed that in 2017, and there were less than 100 blockchain patents awarded in 2019 from that 2017, and now there's 50,000 blockchain patents. When you start to converge IPs together like blockchain and robotics, you'll get something entirely new that people haven't thought of before. And then when you put a micro vertical on it, like supply chain in the US, you can really come up with something that's brand new because it's all greenfield blue ocean. Before I talk a little bit about Singularity and Sophia, I want to go to a specific supply chain example. At Singularity Studio, to give you context, we leverage from the nonprofit Singularity Net, which is powered by crypto, we leverage the AI innovation there to power companies. So one of the companies that we work with at Singularity Studio is DLT Labs. Some of you might have heard of them. Loudon Owen is the CEO, and they're a blockchain company. They claim to have, Loudon claims to have, and he may, the largest enterprise blockchain installation in the world. It's with Walmart Canada, and it's their supply chain that they have brought blockchain to with Walmart Canada. Walmart Canada receives 500,000 freight shipments every year, and they were having 70% invoice challenge. 70% of the invoices that were being sent from the freight companies were erroneous. At least that's what was being said. Through installing the DLT Labs solution at Walmart Canada, they had a 3-month ROI. They reduced the 70% invoice disputes down to 1%. So it was a 99% reduction. And this is just using blockchain in supply chain. That's it. So Walmart, if you read some of the white papers, you could find it at dltlabs.com. If you read, Walmart was very apprehensive about taking this on. They didn't know a lot about blockchain. They evolved it every single day with DLT Labs. But so we're converging blockchain and supply chain, immutability and transparency. When you have 200 data feeds for finance, it can change a lot of things. Now, if you add robotics, like, for example, with Sophia the robot, it's the convergence of metaverse, robotics, and blockchain. Why? Because the vision of Hanson Robotics that launched Sophia is to create an AI that's good for humanity. And really robotics is a form of AI. AI is being produced to power robotics to do certain things. So when you bring blockchain into it and metaverse, you can then train data with the masses playing a game that's learning about humanity that ultimately powers the robot and the avatars. So it's a lot of wacky, off-the-wall ideas, but when you start to think creatively, and if you're here at the supply chain program, it's pretty wide open when you start to converge things like metaverse and blockchain, and you have to be really creative about how you use that. But I think really the world's your oyster when you start to converge those things.
Thank you. To be honest, really, I had a eureka moment just now. Because recently I worked with Netflix India and Wavemaker, an ad agency, and they came to me and said, hey, we want to create endless content creation ideas for short-form content. And they won the award. I was in the background. Nobody knows me. So they won the Data Creativity Award. And after listening to these guys, now I think I can create thousands of ideas per day.
Yeah.
All I have to do is what? Create an NFT on it and start selling it. Good. Now I'll become rich. Okay, next, moving on. Next, moving on, you know what I mean? I believe innovation itself is changing. Myself and Professor Gerard Tellis at USC, we always believe in 3 R's in innovation: rapid innovation, radical innovation, and relentless innovation, unrelenting innovation. So I'm going to ask my panel, what is that one innovation you see in your area? Let me start with Bill. Which you like?
Well, again, at Singularity Studio, because we're AI and AI touches everything, we see a lot of things. So I feel like to stay with the theme of NFTs and blockchain, that blockchain hasn't had its Netscape moment yet. So Netscape in 95, 96 simplified the internet so the masses could actually operate it. Before that, you had to be highly technical, kind of like having a wallet is today. It's ridiculous to have a non-custodial wallet where you have to remember a password, and if you lose it, you lose your assets forever. There's the guy who's searching around in the trash yard trying to find his hard drive, and he actually is launching a DAO to fund it. It's really interesting. He might make more money on the DAO than he did with his lost Bitcoin. But so the Netscape moments are coming with blockchain. And for example, DLT Labs and Walmart, that's centralized blockchain. That's a great use case. I think the supply chain will realize that. It's a really good case study. But I think from B2C, I think Metaverse and NFT clubs as an innovation and then also Apple glasses when they come out and you can see your NFTs in front of you when you walk on the street, real time, all the time. That's where those NFTs are going to be used, by the way. I feel like we haven't seen the Netscape moment yet for blockchain. Metaverse, NFT clubs, where your NFT gives you access to IRL in real world, as well as your AR access to see NFTs on your Apple glasses, as well as your Metaverse access. those are the innovations that I think are going to be game-changing, that Netscape moment for the industry.
Bill, I have to thank you. That is one of the questions on the app. Somebody asked me, what are the smart glasses going to do to us?
Oh, yeah, I feel that's
You answered
huge.
that, thank you.
I think that's a great interface between IRL, AR, and VR.
Yes. Young, what's your take?
Yeah, so I think that regulations is a big part. I mean, we lightly brought up in the earlier conversations, but I think the lack of regulations in crypto world or like blockchain related, I think the regulations will actually bring stability and also credibility to the market. And I think the consumers, buyers wants to have those kind of protections. So I think the rise of the government's involvement in terms of regulations are somewhat very welcoming. And also it will boost another side of the market. And I think that is also helping the innovations. For example, you know, we in the NFT world, we had a first blown out projects like CryptoPunks, and then like we had a Basie, Bored Ape Yacht Club, and then now we have Doodles. You know, it's like all those projects had a very primary model and a success, then more refined community activities and party hyped, and then the Doodles with more focused on the limited IP rights and the licenses. And so these business models are getting seasoned, and all these seasoned models will survive, as Stephen was mentioning. And with the regulations' help, these will be more established as regular businesses, and it will actually soak into our daily lives of economies as well. So that's what I see as a bright future.
Thank you. Maneesh, what is your take?
I mean, I think the big innovation, I mean, like what I was saying before, it's about ownership. It's about finally being able to, information can now be owned online in a way that was never possible. I think the other thing just to talk about that maybe hasn't been mentioned as much is that it's all permissionless. So that's another really, like, it just is breathtaking to think of how fast the innovation is going. And part of the reason, actually, the primary reason why the speed is so high is that it doesn't require permission to use any of these protocols. I can go and buy Bitcoin, Ethereum, and then start building apps on top of these different protocols. And I don't have to go to a bank to do that. I don't have to go and fill out an application, have someone approve me, all that kind of stuff, right? And as a result, you're able to essentially create a system that builds modularly on top. One person builds one thing, and then you say, cool, I'm going to use that, and then call that in my program, and I'm going to build something on top. And you have this stacking. And what ends up happening is that you just have innovation that goes really, really quickly. I'm a software engineer by trade, so in my perspective, it's amazing, right? Because you could just plug into any API you could possibly want to, right? And that's probably a good description of why things are going so fast in the first place.
For Steve, you know, I'm amazed, just a minute, I'm amazed by your 4-year-old son owning a wallet. So I want to put the question in a twisted way. As a father-son team together, talking to you outside, I got a lot of insights. What do you think is the most exciting innovation for the next Gen Z?
Yeah, so Barclays Bank in the UK and Citibank are investors in our company. And there's something that they saw that is a huge missing piece. And the innovation piece, I think, is data. One word, data, right? We are building this marketplace to generate these invoice transactions, buying and selling of invoices, you know, thousands, hundreds of thousands a day that flow through our portal. Our long-term strategy for Crowdz, it's a data play. Now think of this. What's on an invoice? On an invoice, it's like a sheet of paper or a PDF. You got the destination, you got the origin of where that part is being shipped, you got quantity, price, description, and a part number. Just real basic 5 or 6 pieces of information. You have billions of these invoices that flow through our system. Now you can start mapping out the supply base. This chair goes from Greece to Mexico, gets assembled in Canada, and then arrives in the US. all through tracking of an invoice or invoices. So the question is, a lot of companies have tried to map out the supply base. They use things like Tableau or Lumentum. Those companies, what they do is they call up other companies and say, hey, give me your data. We're curating our own data through billions and billions of transactions. And I truly believe in order to map out the supply base, you got to follow the money. And that's through the receivables or the invoice. Now, there's a whole bunch of invoices in this world that need to be traded. But a receivable is not just an invoice. It could be a purchase order. It could be a non-recurring engineering expense. It could be a sales order. There's a lot of different forms of a receivable. We just decided to go after the most complex one, which are invoices. And now we're doing recurring revenue. I'm not sure if you've heard a company called Pipe. They're doing recurring revenue. We're also doing recurring revenue. We launched that with Citibank. So long story short, I think the fact that the NFT and the blockchain accelerates all these transactions basically helps curate this data. And if you can make sense of this data and turn it into business intelligence, I believe that is the power of literally the future of my son's generation, when it comes to data and being able to curate that. So that's it.
Thank you. I'm really having fun here. Nick, how much time we have? I want to be conscious of the time. 6 minutes. Okay, so then I have to go and switch to the most important question for all the students here. We have been hearing about these multi-trillion-dollar opportunities. What is your advice to our students to prepare to enter this market for job, internships, entrepreneurs, etc.? I would start with Bill.
Okay. Well, it's a wide open market. As I said, it's blue ocean, green field. There's so much opportunity. So that aside, Andrew Hong, I believe it was Andrew Hong from Wong? Yeah, from Port of Oakland. I kind of side with, he was on the last panel. I side with him. It's still a human business. This is about humans helping other humans get things done and be productive. So sure, you got to fail fast. You got to, and I'm coming from an entrepreneur's perspective, but I also believe this applies to teams. You have to fail fast. You have to make mistakes. You have to really protect your shareholders and your investors' money. You have to provide value. But the most important thing I found is working with the right people and people you trust, and that never goes away. Now, you could lock yourself, like Instagram was built in a few weeks with 4 developers. You could keep the team real small. But if you find the right people that you trust, you can work with, have a big vision. And from what I've seen today, there's some tremendous people here to work with. I think that, for me, is the lesson learned that you carry with you. Find great people. When you find them, work with them and build something amazing.
Thank you. Young, to your cohorts.
Yeah, so since I was the very first cohort and the very first student, I was the guinea pig. So you're now fruiting off all my experiences and my feedbacks and all the pitch. So I'm gonna give really important advice is don't make this course just another homework, okay? It's like every single project that you're gonna be involved in is very valuable time. So be very analytical, okay? It's like be the best of yourself. So when you learn that, I mean, the blockchain, NFT, sometimes it's very scary to accept the new things. But as a seasoned supply chain officers, you can learn about it, you can analyze about it, and you can model it, okay? So you can do whatever you want. So participate in those projects with a very sincere, with your heart. That's every career opportunities with a live sponsored events. So make it worth, okay?
Thank you. Maneesh, you're a young with a lot of creative juices flowing out of your brain. Yeah. And what is your advice?
Sure, yeah, no.
In a good way.
Yeah, no, I appreciate it. It was interesting because when I was walking on campus, I was like, well, I haven't been on a campus in a while. And so hearing this question, right, and thinking about what my advice would be to students, I think I couldn't agree more with what the folks said just before. Only thing to add would be bias towards action Action kind of reveals more information. I can give you an example in my own life. I grew up playing chess, and I always thought that business and like doing things in life, you could kind of think about all the moves. If you were good enough, you could like think about the 10, 20 moves ahead, and then you'd be good potentially. Or you could go ask people and say, oh, like, advise on the different moves you could take. And that's good for sure. But life is not so, rigid. You could be making a few moves, and then all of a sudden a piece appears on the board that you had no idea was there. And it could be good or bad, right? And I'd say the biggest thing is that if you just have that urge already to go and do something, just figure out how can you do it literally right now. In whatever way, go talk to someone, go start posting online and become a thought leader, like whatever that looks like for you. Find your own voice and make that your own. But and this is advice that I constantly give myself, to be honest, when I'm saying it right now. So yeah, that's the only thing I got to add. Thank you.
Steve, your turn.
So I'm extremely frustrated of what I had to go through. I had to learn the hard way. When I got my degree at MIT Sloan, they didn't offer any classes on sales. And most universities or MBA programs don't. I don't know if Marshall offers
Yes, we
a sales
offer emerging
class.
technology, sales, different kind of sales.
Yeah,
everything.
so that's great because I had to learn the hard way. No matter if you're an entrepreneur, where you have to sell your idea, no matter if you are an interview candidate trying to sell yourself, no matter if you're a manager or director trying to promote someone on your team, you got to sell that person. Sales, I think it's one of those skills that is critical and pivotal for success, especially when you're dealing with people. And I don't think it's stressed enough, especially in higher education. And I wish that there was an opportunity for me to take a couple sales seminars or classes, because I would have probably not stumbled as much. And so, if there's one thing, it would be, engage, take a sales course if they don't offer it. Go take a seminar somewhere else. And it'll pay off dividends in the end. And so that's all I have.
Thank you. We have time for questions? Yeah, let's take one or two questions. Okay, thank you. Taking the lead from you, I always tell my students, make a date with Linda. You know who's Linda? LinkedIn. We offer the LinkedIn website with all type of courses for free. USC pays for it. So all the students, go to Linda, whatever you don't know, few clicks, you can learn what is called the small educational bites. Very important. Now, let's take some questions from the audience. Yes.
Thank you so much for all the information you shared, you guys. My question is basically in a e-commerce or a manufacturing traditional company, for the order cash flow, can we use smart contracts to start with the PO, the work order, and finally getting the cash itself, the AR? And instead of going through the route of looking up the basic purchase agreement or the legal route, if there's a rejection or something happens in the order, so is smart contract the way to go for a traditional firm in future?
Steve, is the question for you?
Yeah, so the answer is yes, right? So right now, we employ smart contracts with Meta and Facebook. And, Meta set aside $100 million a year to buy invoices across the United States for diverse and minority-owned businesses. So women-led, veteran-led, LGBTQ, minorities in terms of blacks and Hispanic groups that are, organizations that are owned by minority types of groups, right? So we employ smart contracts there because everything is automated, right? If that receivable meets a certain criteria, it automatically goes through. We pull the money from Meta/Facebook, and it goes to the bank account of whoever sold that receivable, right? Now, with that said, we're kind of at a crossroads here, and I don't know, maybe my fellow panelists can answer this, but right now, I told you we're on Ethereum since 2017. But we're using Polygon as a second layer because it allows for us to actually utilize this whole smart contract. And I'm not really sure right now, Ethereum, I believe in August, they said they were going to come up with proof of stake.
The merge is coming in.
Yeah, and this is why Ethereum's going up like crazy right now.
2.0,
yeah. Yeah, 2.0, right? So I don't know if that will offer the same utility as Polygon, but right now we're using Ethereum as the first layer and then Polygon as the second layer, specifically for the utility of smart contracts. Yeah. Hopefully that answers your question.
Yeah, thank you. I have another question.
One question at a time, if there's no other questions. Any other questions, guys? Okay, you get a chance.
Yeah, so I asked the same question yesterday. It was the impact of CBDC. I mean, nobody talked about that. The central token that will be released by government, Sweden has done, Japan has done, US is also thinking about it, and also in India. So what will it impact the whole business world, the financial world, everything? So what's the impact of CBDC? Will it validate our crypto world or will it devalidate us?
I think it's a bill.
Yeah, sure, I'll take that. So centralized currency, we have that today, right? It has its benefits, it has its downsides. Obviously, from an upside for the consumer and general consumer, it would be regulated, so it would be less risky. But also there wouldn't be as much opportunity to innovate as well. It would stifle innovation. It could hold the country back if they centralize currency too much because you're stopping all this innovation that we've seen going from 9,000 cryptocurrencies to 20. There's a lot happening there. There's a lot of new ideas. So it could help from a regulatory perspective, obviously, but centralized and decentralized are very different. Also, it doesn't really promote global commerce as well because you're then tethered to one particular currency, which would probably overpower others. So it might stifle that. It might stifle emerging markets if they had to adopt that currency. So,
if I may add,
yep.
So if you think about China, the China's been exercising the CBDC through like their the transactions on mobile transactions and other ways, and also they're trying to overthrow the standard currency as a USD. So they're trying to take their currency as a standard currency with the CBDC efforts. But to the Bill's point, look at El Salvador. Like what happened to them? Like the young president came out with a brilliant idea. At the same time, very risky move to actually accept the bitcoins and cryptocurrency as a payments for the entire economy, and the people are now hostage to those economic activities. So it might be a little premature right now, but I think there's the technology side of it that's proving that these kind of cryptocurrency and the utility can merge into another provides another trend into the future.
Yeah, if you're interested, come see me afterwards. I'll give you my business card, and my company has written a 50-page white paper on launching a stable coin in Q4. And I'd be happy to share that with you. It's always changing because the regulations are changing, and so we're like on version 28. But I'd be more than happy to share that with you. It's really good bedtime reading material, so yeah, come see me afterwards if you're interested.
Sure, thank you.
How about a big round of applause?
Thank you.
Panel here.